Hey, what's up, y'all? It's Rehabs Houses, and I'm back with another video. Over the next series of about 3 to 5 videos, I'll be diving into one particular topic, and that subject will be financing. Financing is something, that seems to be an obstacle for a lot of people getting into it. People don't know if they should try to go, through a traditional bank, find funding through a private person, or use hard money. Hard money tends to be where most people start in this. They tend to be a little more willing to lend to newer investors, and it's just less restrictions getting money from them. So I'm going to start with hard money since they are the most popular source of financing for new investors. What is a hard money lender? A hard money lender is typically a company that provides investment funds to investors for properties that usually, need some kind of renovation. So usually you wouldn't go to a hard money lender for a property that's turnkey or move-in ready. You would go to them for a property that needs some renovation. So they provide funding for, I guess you would call like the riskier investments, the ones that need some work. And then once the property is fixed up, if you're keeping it as a rental and it's rented out, then that property is then refinanced with more of a traditional bank. And that's what you hear a lot when you hear like BRRR, which is a strategy to buy a property, renovate it, or rent it out, and then refinance it. So who uses hard money? Again, hard money is typically used by investors. Hard money is not for people who are looking to purchase properties to live in. And a lot of hard money loans, it will specifically state that it has to be a commercial investment, meaning it can't be used as your primary residence or as a residential property. So hard money lenders provide funding for investors or investment opportunity. When would you use a hard money lender? You would use a hard money lender on projects, like I stated, that typically require some kind of renovation. Maybe you're buying a property, you're putting some money into it and fixing it up and selling it, or you're buying a property that needs some work, you're fixing it up and then you're renting it out. So they will provide funding on properties that some banks may traditionally shy away from, especially with a newer investor where it seems risky, or some banks in general don't even have programs set up for like buy, fixing, and selling properties that aren't your primary residence, where you're not using like a 203K loan or another product that's designed for actual homeowners. So hard money lenders step in and fill the niche of working with particularly investors or people in that sector. Why use a hard money lender versus, some kind of traditional lending or trying to go to a traditional bank? The reason why most people use hard money, especially starting out, is because hard money tends to be the easiest way to get financing. A lot of times they will work with people who've never done properties before. They may just ask you for more money up front, or they may, ask you to work with a licensed contractor ahead of time and things like that to kind of secure the loan. But traditionally, hard money lenders are willing to take chances on properties that other banks or things may think are too risky. So they'll take a chance on the riskier investments where other banks or financing institutions may shy away from. Where to find hard money lenders? I'd say you can find them in like Facebook groups, I think are good. And the reason why I like Facebook groups versus just like a Google search is because you're able to, look up, let's say you go to your local real estate Facebook group, you go in there and you look up hard money lenders. You're able to see people's suggestions as the people you should use, but then you're also able to see other people's feedback, with their experience with working with that same person. You can Google search, hard money lenders are everywhere. You can look on LinkedIn. They're not hard to find. The one thing that I would say is that I've learned that, if you're able to work with a hard money lender or work with a person that you're able to develop a relationship with and that truly has a desire to see you be successful, those are the people that I lean towards. I would say all but one of the lenders that I work with, fortunately, are people who were in the real estate business and they had made money and then they were moving on to their next step, which was lending instead of actually being out doing the work. Those people tend to have a passion still for real estate. They just may not want to do the day-to-day. So they seem to normally have more of a vested interest in just seeing you be successful. These are the ones who they want to invite you out to lunch, or they want to have meetings with you, or they want to just, talk about real estate or pick your brain about it, or, and teach you things that you could probably do different. And with these people, I find that I've had the greatest success. Like some of my greatest mentors have been my hard money lenders. And I can't can't say that I've done that on purpose, but now looking back on it, they have been some of the most, influential people that I've had the pleasure of dealing with in this business. So in my mind, although I paid them a great sum as far as interest rate, I've gotten that back in return for the information and guidance that they have given me. One big thing about hard money lenders and a reason why a lot of people shy away from them is because of the rates. The interest rates can be high compared to a traditional bank. And again, interest rates are something that tie directly into risk. So because a hard money lender is typically taking more risk, they require a greater interest rate in return to, kind of cover the risk that they are taking on, which makes perfect sense. That's with, anything. The riskier something is, the greater return should be. The typical hard money lender may charge you, on the low end, maybe 10% and 2 points. And on the high end, I've seen it go all the way up to 15 or 16% with 1 or 2 points. I'll make another video that kind of goes deeper into how interest rates are calculated and what points are. But, just a note for right now in this beginner video is just that, keep in mind 10% per year and 2 points in interest to up to, maybe 15% per year and 2 points in interest on the high end when you're just getting going and they see you as a bit more risky. I'll go next into the structure of the deal. So the deals, the way that they're structured will vary lender by lender. That's the thing with hard money lenders. There's no clear cut, way that things are structured or, amount that they'll lend. Everybody is different. So you'll see things like they loan 65% of ARV, which is the after repair value, and that can go towards the purchase and renovation. You'll see some that are willing to go up to maybe 70% of the ARV. You'll see some that, will do 9-month loans. Others will do up to 12-month loan. And say, the one with the 12-month loan, you have to ask them questions like, what are your interest rates? What are your points? At a certain point in time, do you charge more? Because say you have a 12-month loan, some, at 9 months will go from 12% to 13%, or they'll charge you extra 2 points. So you need to know that at the end of this loan, if I'm not completed this project or the project hasn't sold, then what happens is what I'm saying. You want to be aware that loan is 9 months. What happens at 9 months in a day if I haven't sold the property? So those are kind of things you want to go over. Again, rates are one of the things that a lot of people shy away from. Me personally, I think that if you get in a property and get out of it, in 6 months, 3 to 6 months, depending on what you're doing and your exit strategy, I find it as a good way to get going. It's a lot easier to get. It's a lot less paperwork than going to a traditional bank. And typically, it's less upfront funds required in order to make the deal work. For me personally, I prefer local hard money lenders that I can build a relationship with, talk to, versus like a national company where they're lending me money. But again, that's a personal preference. The national may have cheaper rates. To me, I just base a lot of things on relationships, so I prefer to work with someone who's closer. So let's have a recap to what we talked about today. First, hard money lenders are companies that provide funds for investors, typically on properties that need repairs. They provide money to both new and seasoned investors. And the reason why a lot of people go to hard money lenders is because they can close really quick on properties, and they typically require less paperwork than a traditional bank would require. You can find hard money lenders in your local Facebook group. You can find them at your local real estate investment meetings. You could also find them with a simple Google search. I stress using hard money lenders that are closer to you because I believe that gives you an opportunity to form relationships, especially with lenders who have previously been real estate investors themselves. So in conclusion, hard money lenders can be a great source of capital. They provide capital fast, typically. They can close in 1 to 2 weeks, I've seen. They are a lot less paperwork, a lot less requirements, willing to work with riskier deals, and willing to work with new investors. I believe that when you get going in a business, hard money lenders are typically the first step for people, and then they'll graduate on to traditional institutions that lend with less capital. If you'd like to learn more about real estate, feel free to check me out. I have a free sample ebook that you guys can download, begin reading about buying, fixing, and selling properties, and I'll catch you guys on the next video.